Residential real estate is a tale of two markets, luxury and everything else. A luxury home is all about location, lifestyle, and provenance, often characterized by high-end finishes, unique architectural details, and exceptional amenities. But most importantly, a luxury home is high on experiences, where the simple moments of everyday life are elevated to become the art of living. COVID-19 has pushed many a luxury and super luxury homes on sale. Corrected valuations, low interest rates, stamp duty rebates in certain states may have acted as catalyst for fence-sitting home buyers. Data suggests that transactions are happening across top Indian cities within a price bracket of rupees 5 crore to 50 crores and more. People are scouting for larger spaces with grander amenities. Needless to say, people want to get the best version of homes that their imagination, deep pockets can possibly stretch to. As the luxury home buyer makes a comeback, let us find out what exactly is trending in the luxury home space in India. To discuss this, we have with us one of the most credible voices of the Indian real estate industry, Mr. Anuj Puri, who's the chairman of ANAROCK Property Consultants. So, Mr. Puri, market data suggests that there has been a traction in the luxury housing market. People are buying bigger, better, and far more efficient homes. Do you observe that sentiments are indeed improving in the luxury homes? And what is the sweet spot of the luxury real estate market where the transactions are happening currently?
So, Namrata, definitely we're seeing a huge amount of uptake on the luxury. And several reasons why we're starting to see this uptake on the luxury. It is, however, having said that, limited to 3 cities. So Mumbai, NCR, and Bangalore. So these 3 cities. The ticket price ranges in these 3 cities. What we are discovering in a city like Mumbai, anything between, I would say, is 10 crores to about 45 crores is doing exceptionally well, and which is very contrary, Namrata, to what we had seen pre-COVID, because that was a segment which was very slow moving, and we've seen the momentum come up in that segment much more than the pre-COVID level. In Bangalore, that ticket price is between 6 to 10 crores. And in NCR, the ticket price is between 15 to 25 crores. So we are really talking super luxury at this moment in time, where we're seeing the traction for 5 reasons. Many of these projects, Namrata, are now completed or near completion. So which a couple of years ago, they were under construction. We've discovered that super luxury, the buyer buys it. Once it's near completion, they can come and touch and feel the project. That's when the demand goes. So nothing to do with COVID, the first reason. It's only when you look at NCR projects in luxury or Mumbai or Bangalore, by chance, all of them are just about getting completed or having got completed, and that's where traction coming in. Second is, these buyers who are looking to buy in these new homes are, for example, in Bombay, have been in South Mumbai market. They've been living in their older buildings, used to go to Wellington Club or CCI. Now that these clubs are closed, they're just not being able to go for their fitness, swimming pool, gym, walking track. As a result of which they're saying is, let's get into a better building, which has all the infrastructure facilities, so that if an event like this happens, we can at least use the facility rather than being stuck in an older building. Third, Namrata, the stock market is back. So, the wealthy guys have remained wealthy, so they haven't become poor. Fourth, they have a lot more time in hand because they're working from home. So, they need a little bit more space. Plus, there is that much more time to start to think of beyond work. Fifth, and most importantly, we are finding that their families are pushing them to say is that we have enough money invested in mutual funds and stocks. We want to live a better quality life. And please move into a better quality apartment now. Having lived in this older building, many of them are in joint families, living with 2-3 brothers, with the in-laws. as a result of which they're now wanting to move out. So it's a combination of things that have happened during this COVID, and perhaps the luxury apartments getting completed, as a result of which we've seen a huge amount of jump in the demand.
Interesting. So it means it's really the super luxury segment which is back in the reckoning. And either way, the importance of owning a home has been underpinned during the COVID pandemic crisis more than ever before. Home ownership is probably looked at as better than dealing with uncertainties of living in rented accommodation. So what are the people exactly buying? There was a time when luxury home buyers made a transition, especially in North India, from independent homes towards apartment living. But one hears of even villas doing well currently. What exactly is selling?
Yeah. So it's a very interesting question, Namrata, that you asked. So I'll give you sort of 6 or 7 trends that we are seeing. First is we are seeing the younger home buyer coming in. It used to be sort of late 30s as their first home buying. We're seeing now this as early 30s. Second, we're seeing a lot of demand for plotted development. Third, we're seeing demand for second homes, like in Mumbai, it's Alibag. In Delhi, it's the farmhouses. In Bangalore, it's the outskirts leading up to the airport, plotted development. Fourth, as you rightly said, is within those plotted developments, villa development. And when we ask these buyers, what has happened suddenly, they're saying is in an apartment, we are on the we were challenged by how the occupiers of that apartment are behaving, particularly with this COVID. If the occupiers are behaving blatantly, there is COVID that comes in the building, and then the local authorities come and seal the building. Here, the fate is in our hand. We have our own plot, we have our own villa. We're not dependent on how the neighbors are behaving or not behaving, and a lot more happier to have their independence. We are starting to see ready to move in inventory, a lot of demand, or 6 to 9 months ready to move in, a lot of demand. Not as much in inventory, which is 3 to 4 years yet to be delivered. We're seeing, interestingly, Namrata, half a room more required. So it used to be like the 1-bedroom guys wanting 1.5 bedroom, 2-bedroom guys wanting 2.5 bedroom. They're half a bedroom, whether it's study or whether it's for domestic help at home, they're wanting that to come in. And lastly, Namrata, we are finding that the MSME sector owner, so medium scale or small enterprise, they are not the buyers. They used to be the buyers, so suddenly they've really been hit badly on their businesses. Who's buying is IT firm employee, pharmaceutical firm employee, a lot of the government employees coming in because the stamp duty reduction has happened, the home loan rates have come down, the property prices have become softened. So that's the segment who's buying it. The MSME segment, which was there, is suddenly disappeared. Or then the super rich, the wealthy, really wealthy guys who are really buying.
Fantastic. That gives a very good overview of the luxury home buying segment as it stands in the last COVID months. But I wanted to now focus on what are the triggers to luxury home buying. Would it be fair to attribute it to corrected prices, distressed sales, or is it the fact that home has become the be-all and end-all of one's existence, the sanctum sanctorum of one's life, so to say?
So very interesting. Again, Namrata, if you're not in the industry, you would think it is the former, that you're getting very economical deals, great discounts, and hence that's when you start to look at it. I think it is more the latter. Many of these developments, the developer hasn't actually cut the price. In fact, if anything, Namrata, they're starting to increase the price because the premium inventory that is left within those developments is small amount now, and hence they're wanting to charge premiums on that. In some of the secondary sales, there has been discount in the prices because those individuals may have other pressures and hence they're reducing the price. But in primary, we've not seen developers really giving a discount on the luxury side. It's largely been propagated by the end user saying is that this is now going to be an investment, an asset that I should not really look at it from perspective of return. It is for my lifestyle that I want to go out and live in there. Exactly the number that what I said in your first question is that they're now being pushed by the family members to say we want to live in a better quality building. We have the money, enough of investment in mutual funds and stocks. Don't consider this as an investment. Don't think of this like a 2% return. The basics of that roti, kapda or makan are somewhere coming back. And they're saying is let's enjoy our residential place and upgrade ourselves. So that's what's happening on the secondary sales. Definitely price reduction, primary sales, which is the developers selling new homes. We've not seen price reduction in the luxury, but the demand has largely come in because people are moving away from this product being considered as an investment to say is we want to really enjoy and more as an end user look at this.
So that means the luxury home buyer is clearly an end user and not an investor.
Not at all. Not an investor at all, Namrata. You're absolutely spot on.
Yeah. So I wanted to focus on the few pitfalls to watch out for. Because some developers are selling at discounts, banks have been mortgaging homes. So as a home buyer, what should one be mindful of when one is purchasing a luxury home in today's times?
I think 4 or 5 things, Namrata. One, just be careful that the developer has the financial wherewithal to be able to complete the project, because that, given the circumstances, given the environment, I think that is the most important. Second, check it out whether the developer has in the past delivered a luxury product. Because luxury, Namrata, is also a very sort of abused word in real estate. So just make sure as a buyer to understand that the developer in the past, if they delivered a luxury, what kind of luxury was that? Third, I have seen, this is pre-COVID, that until the apartment is nearing completion, we don't get that much demand. And which is where I think the home buyer should also be a little careful to buy into a property which is almost coming up for completion on luxury, rather than something which is sort of 3 years away from luxury. Fourth, just make sure that you do the usual checks, which is on the title, on the due diligence of the approvals, on the financial closure of that scheme. And fifth and last is just understand who are the other occupiers in that building. There should be sort of like-minded occupiers, because if you're really going into a luxury, then you want to meet up with people with whom you can associate with. And so do check up the profile of the other buyers in that complex.
Quite a few takeaways from today's discussion. Mumbai, NCR and Bengaluru is where the luxury home buying action is. The bigger, the better. Spacious homes are being preferred by the home buyers who wish to accommodate their new routine of work and wellness, play and study from home. People are stretching themselves to go for that one extra room or rooms, depending on how deep one's pockets run. So if I can afford a 3-bedroom house, I will stretch myself to get a 4-bedroom house. Likewise, a 4-bedroom owner is looking for a penthouse or even a villa. Plots and villas have made a comeback in the luxury market. As COVID times, everyone doesn't want a set of shared amenities. Projects nearing completion or ready-to-move-in units are being preferred. Overall, the pandemic has reaffirmed the faith in home buying and ownership as against staying in rented accommodation.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.